Welcome to The Explainer. Today, we're taking a guided tour of the 2025 investment outlook. We're going to look at where the big money is flowing, from stocks and real estate all the way to crypto, and really figure out what it all means for the year ahead. So let's get right to it. Where is the smart money actually going in 2025? It's pretty much the most important question for any investor, right? We've crunched the numbers and analyzed the trends to give you a clear roadmap of what's happening. So let's dive in. If you had to boil down the entire mood for 2025 into just two words, it would be these: cautious optimism. On one hand, you've got these incredibly powerful forces, like artificial intelligence, that are driving real growth. But on the other hand, there are some very real risks out there that are keeping all that excitement in check. All right, our first stop is the engine room of most portfolios, the stock market. And this is where that whole theme of cautious optimism is really playing out in full force. So, analysts aren't exactly predicting a wild runaway bull market for 2025, but they are expecting some steady, positive returns pretty much across the globe. As you can see, Europe and Japan are looking particularly strong, with projected gains around 9 and 8%. The big takeaway here is a picture of resilience, not a crazy boom. Now, the single biggest story driving the market, you can't miss it, is what we're calling the AI effect. And this is not just about tech companies. The absolutely massive spending by the giants on AI infrastructure is creating these huge ripple effects. I mean, think about it. All those new data centers need a ton of power, which then boosts demand for electricity, and that in turn gives a nice tailwind to clean energy companies. It's all connected. And this slide really captures the core tension in the market perfectly. On one side, you have this rational exuberance, real optimism that's fueled by strong corporate earnings and genuine innovation from AI. But on the other side of the coin, we're facing some serious risks. Valuations are high, there's the potential for trade shocks, and some analysts still see a lingering 40% chance of a recession. Okay, let's shift gears from the stock market to something a little more, well, concrete. Let's talk about the foundation of the physical economy, real estate. Now, while the overall property market feels pretty stable, the real story is hiding in the details. You've got some sectors, like industrial logistics and especially data centers, that are absolutely booming. Meanwhile, the office space sector is still facing some challenges, though there is a clear flight to quality, meaning the best, most modern buildings are still in very high demand. Just to give you a sense of the sheer scale we're talking about here, look at this number: 10 billion pounds. That's how much a single company, Blackstone, is investing into UK data centers alone. Demand in that sector is just completely outstripping supply, and that tells you exactly where the big institutional money is flowing. All right, we've gone from the physical. Now let's journey into the digital frontier. We're heading into the wild, but you know what? A rapidly maturing world of cryptocurrency. Bitcoin has had a truly massive year. After starting 2025 off strong, it just surged to a new all-time high over $120,000 in the third quarter. And what's really impressive is that it's held on to most of those gains. The momentum has been absolutely incredible to watch. So, what is going on here? What's driving all this? Well, the most crucial change is the arrival of big money. Over $55 billion has poured into new regulated Bitcoin and Ether ETFs just this year. Now, this isn't just retail speculation anymore. This is serious institutional capital entering the market in a huge way. And that flood of capital? It's happening for one really simple reason. The rules of the road are finally becoming clearer. In the US, we're seeing new frameworks for stablecoins. Over in Europe, the big comprehensive MiCA rules, that's markets and crypto assets, are now in full effect. And it's exactly this kind of regulatory clarity that gives large institutions the green light to invest. But, and this is a really, really important but, you have to remember what you're signing up for. This quote says it all. Extreme volatility is the price of admission. It is not at all uncommon for prices to swing 10% or even more in a single day. So yes, there's a potential for high reward, but it comes with extremely high risk. No two ways about it. So, with all this volatility to think about, how are investors trying to build more resilient portfolios? Well, that brings us to our final stop on the tour: funds and alternative assets. This chart from a recent Schwab survey gives us a great snapshot of what kinds of assets people are actually holding. Now, it's not a perfect portfolio breakdown, it's more of a popularity contest.
You can see 64% of those surveyed hold stocks, 41% have mutual funds, and 37% hold bonds. For decades, this has basically been the standard playbook for building wealth.
But here's the big shift. A really significant number of investors, 42% to be exact, now feel that the traditional 60-40 model, a portfolio of 60% stocks and 40% bonds, is outdated for today's market. They're basically saying the old rules need a serious update. So what are they doing instead? They're turning to alternatives. And just take a look at the performance of gold. It has been an absolute star performer, soaring nearly 57% this year alone. Investors are flocking to it as a reliable hedge against economic uncertainty and inflation. It's a classic safe haven asset doing exactly what it's supposed to do.
Okay, we've covered a lot of ground. So what does this all mean for you? Let's do a quick 60-second recap of the key takeaways. For stocks, it's all about that cautious optimism driven by the AI effect. In real estate, the hotspots are those specialized sectors like data centers. Crypto, it's going mainstream thanks to big money and clearer rules, but don't forget it is still highly volatile. And finally, a lot of investors are looking past the classic portfolio to alternatives, like gold, to find some stability.
As we've seen, 2025 is really shaping up to be a year of massive opportunities, but also some pretty big questions. And that leaves us with a final thought to chew on. In a market that's being fundamentally reshaped by both technology and uncertainty, maybe the most important question isn't just where to invest, but how you will find your own balance.